within this zone. So that means we can say, okay, this guy is our structural liquidity. But now, where is the QMR? Where is now our entry? You can see this last guy on a normal day actually didn't fail at first, right? It didn't fail at first, right? Because you can see price came back to it, gave a little reaction, and then eventually it failed. But you can see it, this guy, you can see this last bearish candle before this move now becomes the QMR. Or you ignore this side, you now say, okay, because this is actually the sweep here.
All right, so beyond the
you can see this is now our sweep.
It's a very short deck, and I will give it to everybody.
Of the previous low.
You all go with this.
Yeah, and this is our break. Okay.
So after
now, where is the last
beyond the lens managing a photography business,
bearish candle
business, right?
that price swept?
Focusing on today.
The last bearish candle that price swept before this bullish move. Obviously, we can see that this is the last bearish candle that price swept here.
I admire the creative industry.
It now becomes our QMR,
now more than ever,
our area of focus. We now do what this is where risk and confirmation entry comes in. Yeah. Now you can decide to just place your entry like that. This is called risk entry. It goes on the higher time frame. Yeah. You can say that okay, since you have this liquidity, you have everything in check. You can now place your entry. And you guys remember we actually called this trade live.
Power of the creative industry. When I talk about creative industry,
then you wait for price to come.
Like photography, videography, arts, painting, movies, entertainment, all of that. And,
you wait patiently for price to come.
We find ourselves in this whole digital era where you have to appreciate the era we are in. So if it's not too much of a hassle as well, I want to put your hands together for yourself. Because I feel like, it's daring and it's bold to want to be remarkable in this industry because it's very relevant. It's
that
very
simple.
Relevant. Everybody
you
wants
made
to
money.
look good. Everybody wants to
right.
appear.
So this is basically you just waiting, right? Understanding
that's the power you guys wield. So
your PO high.
The
first thing you actually needed to understand was structure. Then after structure, liquidity. And after liquidity, your PO high. Your PO high is the QMR. Now, to know the QMR, you need to know what an order block is. I hope everything is actually connecting now.
All right, so I was talking about.
I believe everything is connecting now. Yeah. To know your PO high, you need to know what an order block is.
Into what I mean when I say that. So this is basically.
And another block is very simple. It's the last. It's the last bearish movement. The last bearish candle before a bullish move. The last bearish candle.
The business of photography,
before
driving photography career isn't just
move.
Skill, it's strategy, right? I want to make it interactive. Can anyone tell me there are no wrong answers? I promise you, there are no wrong answers. Can anyone tell me what they understand by strategy? In the simplest way possible. I know it sounds like this big word you hear, strategy this, strategy that, but it's as simple.
As you can see, this is the last bearish candle here. So what are you supposed to do?
You can Google it.
Come back to it and move. So now, compared to those that will just enter their trade from here and say they want to cover this low, or they even, as magicians, they want to trade like this. But you understand that price, and one other thing about other blocks is that some people do say that is where the banks are placing money and all that. All that things is just crap. Just keep it very, very simple. Understand that it is just the last. I don't know who's trying to log into my trading views from somewhere. I don't know who that person is. Right? I have to change my password again anyway. So it's just simple. Just be very, very simple. Just keep the explanation simple. So you'll be able to use it over and over.
I promise you, your skill is not enough. Your skill is important.
Now you're able to understand that this is the last bearish move here, and that's my order block. Fine. I will either just use the risk entry and just enter my trade there and wait for price to come. Just like this, and boom, you have your entry.
No one else can give you your own target.
It's that simple. right? So I've shown you guys two types of POI.
We'll talk more about that.
Right? The most effective one, the one I like to use mostly here, is the QMR. And you guys are actually yet to learn what I use and use consistently, which is the QMR. But to understand the QMR in my own form, right, in my own way, is to understand order block 2.
And like she said,
the order block that failed.
The number you're doing right now,
it's that simple. But we all know that for that our order block that failed, without our QMR to be valid, we need structural liquidity.
Maybe you get like what now? Maybe
we need structural liquidity. It is very, very important to have structural liquidity in all the trades.
Step 2 then
it's very important.
They create systems.
Let me give you guys one more chat example before
typically doing 5 jobs a month, right? It's just you and some other person, and you want to do 50.
All right, on AUD USD, I think I took a sell.
Right, I mean,
sell on AUD USD.
Maybe 5.
When was it? A very long time ago.
Events on the same day.
I think a few weeks ago. So let me look for that entry.
Stuff, right? You need to build a structure.
Show y'all.
That allows you to.
All right, cool.
While
so you can see
what you have, right?
What happened here?
The assets you have, be it the cameras, be it the lighting point.
Let's use.
I mean, I'm I don't know a lot more, but I'm just going to speak to the things I did my research and all of that, right? The assets
now,
you have.
Okay, let's focus on this one instead.
Right? To get as much as you can before you even talk about getting.
Now you can see what happened
that
here.
Falls within creative.
You can see there was a sweep of this low of the previous high.
Is when you've listed out
a sweep,
your goals, which is why you hear a lot of people.
A break of structure.
Set your goal, set your goal. It's very important. It's
right.
Very important.
And then obviously we all know that what is this?
Without that drive, you're just going to be, if job come, you know, come.
This is actually our setup. This is what we want to see every time. And this becomes our structural liquidity, yeah? But then to actually make it make sense, we all do something as well. We want to ensure that our entry is within this zone. Now, and this liquidity is also touching the 50% or above it. Now, this actually makes sense, yeah?
Okay.
But now, where's our entry now? In this scenario here, we don't have a QMR.
Okay.
Because the QMR has already been mitigated. This is originally the QMR. Right, you can see our price came back there already. So, but above this our zone here, there is no QMR there. Right, there's no QMR here. So what do we use in a case like this, in a scenario like this? Remember, we don't want to trade if our entry is not within the zone. Now, this is a very good example because I know most of you will probably make that mistake, right? Where your QMR is below this 50%, this zone here. And then you think that, okay, let me just take the trade like that. No, it doesn't work that way. The moment your QMR is slightly below this zone, look for the next PO high. That means you have two types of POI, which is the order block and the QMR. The order block alone can be used alone. The order block that failed can be used as a QMR. I hope I'm not really confusing you guys. I want you guys to get this. So in a scenario like this, where the QMR, original QMR has been mitigated, that's all right. Now, what's the next POI you're also going to use now in a scenario like this? You can see we have this, so that is actually a very nice structure here.
It's your niche you sell.
You can see this last
best wedding photographer in Lagos. It's a daring statement, but you can
the last bullish candle before this drop. What did I call it? Last bullish candle before this drop is your order block, and that is now your new PO high. If there is no QMR, this is now your new PO high. And then what validates it is the structural liquidity. Now, what do you expect price to do? You basically just have your short position right there, cover the high very well, and then hit your target. Now it's that simple. Then you wait for price to come to it. Can you see that?
That allows like plug and play for content.
And I got this trade live during NFP, before NFP. So yeah, called this trade live. I called it live, and I think I want to send it to you guys. Can you see we use the order block in this case? what divided the order block? First is a sweep of this high, a break of structure, and a structural liquidity. It's just too simple. This is how we look out for.
It's about building something.
A sweep of the previous high,
right? So there has
a
to
break
be
of structure, structural liquidity. Now, you can see how the QMR will make sense here. It will make sense when it is below, when it is above the structural liquidity.
But what is that effect I can have?
The moment it is below like this, that means price came, this structural liquidity came to it, yeah? And there will always be another block above for price to, come back to. But if you don't have that and it is right above, this is very, very low. And you have your entry there.
At the beginning,
now, I always prefer risk entry. If I have this setup here, I always prefer risk entry to confirmation entry. Confirmation means you're not sure of that particular zone. And the only reason why you can't be sure of a particular zone is when, let's say, on a higher time frame, let's say the 4-hour time frame, you have this sweep and a break. But there is no structural liquidity yet. That is where you can now mark out your QMR.
The 4 key areas to master. So these are the 4 key
you can now mark out your QMR and do what? You wait for confirmation.
Creative business.
Your confirmation basically is looking for the same thing again. On a lower time frame, you look for a sweep of the previous high, a break of structure, structural liquidity, and you're looking for the same thing. Now, instead of you waiting for price,
all right, so the first is financial management.
Give it structural liquidity here. The moment price taps into that your higher time frame PO high, you can now decide to now scale to the lower time frame and look for the same thing, your actual entry model. I hope that makes sense. Now let me show you guys on GBP USD. It happened on GBP USD. On the weekly time frame, there was no structural liquidity, because if you guys pay close attention, I said if there's no structural liquidity, there is no entry. Right?
Very important.
Now let's look at this.
This will help you.
We know that this is a sweep of the previous low, yeah?
And we're in a time when we've seen photographers
a break of structure.
Investors like Snap. Snap has brought investment deals. I'm sure you guys have heard. Like
and that means this low is expected to be protected.
You can only do that when you tidy up.
And this is our failed order block.
When you tidy up your books, your price have a price structure breakdown.
Now,
I'll always tell you, AI has already
there's no structural liquidity within this zone, and this is also the weekly time frame. One candle here, we take one whole week, one full week, one candle. Do you mean I actually want to wait for one full week for price to even move in my direction? As a matter of fact, price has even been, playing within this zone, and we are still here to see one to one hour.
That's where this comes in, right?
Price is here to do 1 to 1 hour. So you mean I have to wait for weeks to make money from the market while I'm actually on a trade? No.
Is it bogus?
So it's just pretty simple.
These things matter a lot.
You can see price taps into your PO high now. Into your PO high. You know that, okay, this is a zone where I want to look for possible entries from here. Price now taps into your PO high. It's your responsibility to now go to the lower time frame. Now look for your entry model. Right? And you can clearly see it here. What can I see? A sweep of this low, a break of structure, structural liquidity, and the QMR. Where is your QMR? Where is the last candle that failed and all that? This is pretty much it. Or you could just use this order block as your entry itself. You can see this is the last candle, the last bearish candle before this bullish move there. And that could be your
how you position yourself and how you market
entry there.
And how you take yourself to the next level. That's where
you have your entry right there.
The third is your client experience. No, just
you cover the protected low.
How you can decide to
and you have your entry and
a small scented candle to your client. Something cheap but it's thoughtful. No one else is doing it.
Let's see.
Right? When
and
you're
boom.
done, you could just
you can see price eventually came back to it, and then you had your entry. You can see price came back precisely to that order block, like it was so precise. Can you see that?
Build strong relationships with your clients.
Even after the whole delay,
just because of the way you made
price was obviously creating liquidity, yeah? But you can see price eventually came back precisely to that zone. Why that zone exactly? Why? It's not random.
Discover
it's not random.
Points.
Can you see that?
Touch points is like every
price eventually came back
when the inquiry
and
comes to
boom.
when you get booked to how you prepare for the
in
service,
this case,
to how you
order
deliver
block.
the service.
Now
to
you
how
would have
edit
made
the
money
picture,
and left the market compared to now waiting on the higher time frame. So that's your order block as your PO high. You can start to just take your trade like this
different from
on this 1 hour. Or start to now wait for prices, tap into it again, and you scale to the lower time frame again to look for the same thing. That basically means price tapping into your point of interest. This zone is your point of interest. So you can start to use that as your risk entry or go back to lower time frame for confirmation after price has tapped into it. I hope you guys actually get it because I'm already mixing top-down analysis with this.
It is so important.
I really want you guys to understand PO high, which is the QM high and the order block. Those two basic stuff here.
Right, and likewise,
the point of interest here. And I hope you guys actually understand it now.
You're working towards it.
During the next class, I will now put everything together. I've done part of it today already. If you're actually smart, you will see that. You'll notice that, right? I've done some analysis. I've tried to like put everything together. But still, I will take my time again to put everything together during the next session. But for now, I want you guys to really understand our point of interest, which is the QMR and the order block. The order block can be used on its own or used after price sweeps it.
Is that really growth?
It's that simple. This is your assignment. Go back to your chart. On any listing of your choice, any
so you need to be very sure
instrument of your choice. I want you to mark out a QMR. Every QMR, don't mark out structural liquidity or whatever. Only QMR and the order block. Order block on its own, QMR on its own. Study it. I want to see your charts.
In a day
tomorrow,
but
before tomorrow, I want to see your charts.
You have to think of how to partner,
and that will be all.
Think of how to set up structure in a way that you can have people working under you that do these things for you, so that way, instead of doing 4 and getting burnt out, you can do more than 4. You can even train. We're going to get to the.
All right.
I think it's in the last time we'll talk about.
So let's start over.
You can
structure. So set up the structure,
skill, like Snap has done.
That's the basic and the advanced market structure.
Yeah,
and then we'll move on to liquidity.
The training photographer.
Then we'll move down to the PO high. Right. And this is everything I do. This is how I trade. This is all I look for before trading. So that's why you see when I say keep it very, very simple, keep it simple, keep it stupid simple, this is basically what I mean. And this is how I trade. This is how I trade consistently. This is how I've been trading that, make me a consistently profitable trader. Yeah? We have people that are profitable and we have traders that are consistently profitable. Yeah.
Right.
To be consistently profitable means you're doing simply means you have a hedge that plays out at least at least a 60% win rate here. Something that you can confidently do over and over. Yeah, something that you can actually go to your chart now and confidently place the trade. Yeah, you analyze it and you're not scared or doubtful if the trade will actually go well or not. There is no fear. There's no form of fear. You're just there like, okay, you believe this will actually go well. I mean, you're always applying risk management, of course, but we haven't done risk management. Okay, we'll do that as well. So yeah, but then
because he was making them money.
The simple way actually traders gives me this confidence. Yeah, I'm able to compared to when I used to trade, when I used to be very, very scared of every trade. That confidence wasn't there. I used to be like, will this thing actually hold or not? But now it's pretty simple. After simplifying everything, how I trade here, which is just structural liquidity and my POI. There's this confidence I get whenever I want to jump on each trade here. There's this confidence I get whenever I'm up on each trade. It's just different from every other trader, which is why I've been able to send my setup to people, friends, and general, like public. Yeah, I've been doing that since February or March of this year. I've been doing it consistently. And if I'm to calculate how many wins I've had compared to the losses, trust me, I've had over 80% win rate ever since I've been doing it. Live sessions and all that I've had, it's definitely over 80% win rate, because I remember actually I do send my friend trades, I do send my friend trade, and I recall, if I'm not mistaken, we've only taken 2 or 3 losses together, compared to multiple trades I've actually sent to him.
Right. So
that is basically how one thing I'm actually very proud of when it comes to just keeping trading really, really simple like this. Structural liquidity and POI. That longevity is there. You're able to come back to the market more times and over and over, compared to when I used to jump to the lower time frames, and then that confidence is not there, because you're wondering, what if price comes to this low? What if price comes to this low? What if price? And all kind of stuff here. That kind of, you're not even, you see, your heart, the rate at which price even moves, it's kind of like messes up with your psychology and all that. Anyway, let's just move on to today's topic. Today's topic basically, I just want to put everything together. How you can trade structure, liquidity, and the POI. How you can trade, add everything together to actually form a setup. And we're going to use Euro GBP or GBP USD as an example. The first thing is structure,
something Giphy. I can't remember the name right now.
Basically, we understand that structure. We want to have.
Decide to also have that as like a side gig.
For structure,
stock images.
It must, take out the previous low.
Teaching, like I had mentioned,
this is a buy structure,
photographers. And you can even do research for
must sweep the previous low first, then a break of structure,
for profit,
right?
By having multiple streams.
So that means I have a sweep and a break of this. And that means this low is expected to be protected here. But then, that means it's actually structure, it's some structure. But what validates my own structure? Basically, I want to see this happens first. Then I'll say, okay, since I have 2 breaks here now, can now say, okay, this is my structure. This is my structure. I have inducement liquidity, I have structural liquidity, and I have this inducement liquidity as well. So in a buy structure, all I'm basically expecting is for price to come back to this low, and then boom, So now let's go to the chart example to explain structure, liquidity, and POI, how you can just put everything together to form a trading setup.
For instance, is like tech.
Then we'll also work on top-down analysis too. So let's use GBP USD instead. Sorry.
It's so broad.
Let's use GBP USD.
Turning passion into profit. It's so broad that if your niche, for instance, is tech, you can even start to position yourself to head the marketing aspect. Because within organizations,
let's just call price.
Within organizations, they need videographers, right? One of the companies I work with is a real estate company.
All right.
And they then have their internal videographer and photography team.
Really
so you
bad
can position yourself
this
for that
zone.
Multiple income stream. Right? You can position yourself as that.
Right.
You can position yourself as
looking at this structure, we know price was bearish, But looking at this current structure, what can we all see? Apparently, I can see a sweep of this previous low.
Yourself as an expert in your niche, very important.
And
everybody wants
you can see price created. Now, this is where a lot of us make mistakes,
After all, we used to say who the best is.
Some probably think this is a break of structure. Of course, that's a break as well. But the major break of structure, right, that is where most of us have problem, And I don't want to confuse you guys today. I want you guys to really, really understand this. I'm going to be very, very simple. But now look at this. Let's say price was bearish.
So you're branding yourself as somebody who
was bearish. Price was bearish. Right.
Your messaging is
then price
excellence. Your messaging is
started doing this.
Quality, professionalism.
Price started doing this.
You want to make sure your brand speaks. All right, and then the second to the last line.
No, that's basically not it. Assume price was bearish.
Right, so this is how to make it run for you. Your creativity is your power. Your business is your legacy.
Now you know this is a swing structure.
Your creativity,
right? This is a self-swing structure.
Your business,
correct,
is your legacy. So your
this
power
is a self-swing structure on its own.
Your legacy.
Would you tell me that because you see price take out this low and take out this high,
legacy, right? How do
you now have a break of structure? Will you tell me that this is now
posterity, right?
a
How
swing?
do you make your skill to be so relevant that it speaks for you?
Well, in a real sense, yeah, this is actually a swing, right? Price has taken out this high, so now and price also took out this low here. Now you can now anticipate this low. You can say, okay, this low shouldn't be taken out. Right, that's a very quick one for a quick trade. For a quick trade, but if you want a long-term trade, price will not change to buy to the buy structure until this previous lower high has been taken out.
So you need to sit down with your numbers.
You guys should pay close attention to this, please. I don't want you guys, to be confused and all that. Because some of you are seeing this guy as a break of structure. Of course it is. But probably you want to take this one as a quick trade. Fine. But this is the main break of structure here. So this guy is our predicted low. This is our transactional liquidity. Then you can see what price is doing here. So originally here, what can we all see? We all know that, okay, price has taken out this previous low here, taking out this previous low, then giving us this leg.
And then set up your price.
Please, I don't want to confuse us. I know some of you are probably confused already, but let me come again.
You attract the right clients by having a niche in the first place.
Structure, right? So originally, yeah.
You already know the kind of clients
we know. But it's difficult for basically, you price will sweep the previous low in a bullish structure. Like said, you cannot be everything. Take out the previous low, break structure, yeah. Create another low, then break structure.
A workflow that allows you to create and to grow. So set up a proper workflow.
Then that will give us our bullish structure,
right?
A sweep of the previous low,
each touch point,
transactional liquidity,
the booking level,
transactional,
the service,
and then we get a reversal. Maybe we start getting reversal, know that, okay, this low is expected to be protected, and then we have this, and these are our structural liquidity here. So in a normal day, we expect price to come back to take our structural liquidity and then continue here. Because structural liquidity is used for continuations, obviously. But then how do you determine what if you have series of breaks within? Which of them is your main break of structure? That is where the real swing comes in, right? We have the major swings as well, and we also have the minor swings. In this case, this is a minor swing, right? We have this sweep and we have this break. In this case, this is a minor swing, but you can say this is your swing structure, right? But if you look at the bigger picture, let's say we'll come to the 4-hour time frame, and that's where it even makes sense to you. This is one reason why you must look at the higher time frame. Now, can you see what we have here clearly now? Can you see that this right here is the main break of structure? Can you say this is the break now? Can you say this is the break? Obviously no, yeah? Because this is the obvious high, the previous high that price took out. And then, please take note of what I want to say now. This is pretty much how it works. Let's assume price was bearish. For you to start looking out for buys, that means price must take out the previous lower high. Now this brings us back to the basic market structure. I told you guys to pay close attention that time and then study it very well, try to understand it. The reason for the highs and lows, higher highs and higher lows, lower highs, is for you to actually understand how it works here. Now, if you don't understand that basics, you won't be able to understand what I'm talking about now and how to identify the real swing structure. The major ones from the minor ones here. You won't be able to identify it. Now, this is where it comes in. You cannot say price is already bullish until price takes out the previous lower high. In a scenario like this, if you have something like this, price might only be creating liquidity to tap into this lower high and sell off. But some people, would think price is already bullish here. Look at price was obviously bearish here, but some people, after they see a sweep of this low and a break, they will say, price is already bullish. So what do they want to do? They want to start buying from here. But price only created liquidity. Price only created liquidity for this lower high to hold. Then what will eventually happen? We have this. Please pay close attention to this. So let's assume price didn't take out this main high here, this previous lower high here. Let's assume price didn't take it out and price only took out this high here. Trust me, we would have had this happen. This would have happened instead. But we can all see that this is a clear structure itself here, a clear swing structure, and price took out the previous lower high, which makes it a break of structure, right? Which makes it structural liquidity, transactional liquidity. And if price takes out the transactional liquidity, where is the next stop? Where is the next target? Structural liquidity, right? And this is obviously structural liquidity here. Structural liquidity. Now we have a sweep of this previous low here, which makes this low protected. Then what are we anticipating now? Now we're anticipating that, okay, that means if we have something like this, and this is structure, right? This is structure. If this is structure, so that means that this low will be taken out and price will do what? Continue, right? That makes sense, yeah? So now you can, what else do you want to look out for now? Now what comes next?